Hello investors, welcome to Business Learnings. In this video, I'll be analyzing Indigo Paints IPO, and there are several risk factors which unfortunately I tried watching a couple of videos on the YouTube. They did not cover it, so I thought that I'd better make a video. So please ensure that you watch the video throughout the end so that you get complete understanding of what are the pros, what are the cons, so that you know what you exactly are doing. I'll also be talking about the gray market premium, yes, and and how much, whether you should be investing in this company for long term or not, whether I will be investing everything. So ensure that you watch the video throughout the end to get the complete understanding. And secondly, please subscribe to the channel so that you do not miss out my future videos on how to make smart money. Let's start. The good thing about the industry itself, the paint industry, the decorative paint industry itself, is expected to grow at about 13% per year. 13% per year means about your money doubles in about 6 years. Good number, right? But this is not just the only number. 33% of the entire market is unorganized, which means that the organized players, Asian Paints, Berger Paints, Indigo Paints, Consigner, like everyone, they are going to capture this also. That's why this number 13% is it's probably it'll probably be 15 to 16% per year. First thing. Second thing is real estate. Real estate sector was booming from in between 2005 to 2015-16, but after demonetization, we all know that it's slumped. Prices of real estate have been stagnant. There has not been much buying, and it is expected that in the next couple of years this sector will re-emerge. The prices will start going up, people will start buying, and that's where we see that paint industry will again see a demand boost. So expectation is that this 13% growth in the paint industry will probably be 17 or 18%, which is again a great number. Now, good thing about this company is its presence in tier 3 and tier 4 cities. Uh, when the company started, it started focusing on, it started itself from tier 2, tier 3 and tier 4 cities. And in today's date, about 50% of the revenues of the entire paint industry, it comes from these secondary cities than the metro cities and the metro and tier 1 cities. The reason being, these cities, the metro, the high-end cities, they are saturated. They are almost saturated. There is not much demand which is expected or which is happening, and that's why we are expecting Indigo being having a very good presence in tier 2, tier 3, tier 4 cities. We are expecting that it will capture a lion's share in the industries sector, industries part, and that's why we are expecting a very good growth. And in fact, this growth has been even shown by the numbers of the company. 94% is 94% profit after tax. 94% profit after tax, doubling your money, doubling profits every single year. 25% 25% growth in revenue for the last 2 years, every year. Good number. The management has also commented that the company has been growing its sales at the rate of 45% for the past 10 years, which is amazing, simply phenomenal numbers. And not just the revenue numbers, but return on equity and return on capital employed, these are also impressive. Now, these are not very impressive because if you talk about Asian Paints, Berger Paints, all of them are approximately giving the same kind of returns. Return on equity and return on capital employed are not amazing, just industry average. But these numbers, the PAT numbers, profit numbers, and revenue numbers, they are amazing. Now, debt to equity ratio, it's very important. We already saw in coronavirus, COVID-19 lockdown times that the companies with high leverage, high debt, they found it very difficult to survive because they had to pay their interests. And the good thing about Indigo Paints is consistently for the past couple of years, it has been taking down its debt, and management has commented that that it will be debt-free company shortly after the IPO, which is a very good news. The gray market premium for the company is about 850 rupees. On 17th, today is 17th. Today its gray market premium is about 850%. So you can expect about 55 to 60%. But the risk here is this gray market premium is as of today. Last year, everyone will recall is what happened with SBI cards. It also had a gray market premium of about 50, 60%. But after coronavirus hit, the stock market was going down, and the company, the SBI Cards company, it listed at a discount from its issue price. So whether that will be the case, we'll talk about it towards the end of the video. I already talked about how the revenue of the company has been growing at 42% CAGR in the last 10 years. Pretty good numbers, pretty good things, but we'll also have to talk about what are the negatives. The fresh issue, whenever an IPO is launched, you should be looking for what percentage is fresh issue and what percentage is offer for sale. Fresh issue is the money raised, which this money will be used for business activities, for expansion and everything else. And actually about 300 crore rupees, this money is being used to, expand, establish another plant in Tamil Nadu, some corporate expenses, buying some machineries, but about 800 crore rupees, more than that. This money is being sold by the promoters. What's the reason? If they are so confident that the company will do well in the future, why are they selling this huge portion, 800 crore rupees of their worth? Uh, but again, the positive thing here is Sequoia Capital. It's a well-known venture capital, and they will remain invested for the next 5 to 6 years. And Sequoia Capital hasn't commented on this. Indigo Paints has commented. The management of Indigo Paints has commented that this company, Sequoia Capital, is going to stay for 5 to 6 years. And if it is indeed the case, we can expect huge returns because VC firms simply do not stay invested if they do not expect very big returns. Now, the PE ratio of this company is 141. Probably it understood that everything is going, all the IPOs are heavily being traded at heavy premiums, and that's why it took the PE ratio of 141. But again, uh, let me show you the PE ratios of other paint companies so that you get the idea of what the industry PE is. Uh, competitors, yes. Asian Paints has a PE of 106, Berger 144, Nerolac 90, ExxonMobil 58. So industry PE is way below, the average industry PE is way below 141, and that's what a single concern that I'm seeing. Why is it? But again, probably this number is justified by 94% PAT and 25% revenue growth. So no problems in that area. Uh, Next problem is marketing cost is about 10% of the revenues. Uh, Again, for other companies, just 3 to 4%. Uh, but this is important because it's brand ambassador is MS Dhoni, and the company has already established its brand image in uh, amongst Indians, and it has a strong brand equity, I'll say. Uh, And the reason it's 10% of the revenues, marketing costs are 10% of its revenues, while for others just 3-4%, because its revenues itself are a very small number. And to advertise at the national level, you need some costs. And I'm actually impressed that they are managing it with just 10% of their revenues, and this is expected to fall down as their revenues continue to multiply in the next coming years. The biggest risk factor that I see with this company, the listing gains, is listing is on 2nd Feb, and budget 2020 for the financial year 2022 is on 1st February. Uh, the history says that whenever Nirmala Sitharaman presents the budget, the next year the markets go down. I'm not saying that, but I'm saying that markets are currently overvalued. They are at record highs, and it's highly likely that even if there is something, a very small thing to dislike about the budget, the markets may go down, and this premium simply can be diminished to probably zero, probably 10%. I don't know, but that's a risk that I see with the listing gains. But again, for long term, this is a very great company, worth buying. Uh, for short term, I don't know what will happen in the budget, and again, recommendation will be buying on dips, uh, holding it for the long term. But this video is for educational purpose. Please do your own research or consult your financial advisor because it's your hard-earned money. So yep, please take your decision wisely. Thanks a lot for watching. See you in the next video.